Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I am reporting to you live from Wall Street Trading satellite office down in sunny South Florida. Today's date is Sunday, December the 30th, 2012, and here is this week's weekend review brought to you by WallStreetTrading.com. Want to first start off by saying happy holidays to you guys out there. We're coming up on a new year here. Hopefully, you guys had a great year this year, and we're looking forward for better things to come. Want to thank you guys for those of you guys that have been supporting these videos and supporting the great analysis that we have been providing you guys throughout the year. And all I can say is just look for more to come, and we have a whole bunch of things that we plan on, doing going forward into the new year. That's going to help the average trader, experienced or non-experienced, novice, noob, whatever you want to call yourself, whatever level you're on. It's going to help you advance your game to the next level. In any case, let's go ahead and take a look at the markets here. Let's start off by taking a look to see how the weekly indices close in some key sectors. The NASDAQ was down 2.01%. The Russell 2000 was down 1.87%. The Dow Jones was down 1.92%. The S&P 500 was down 1.94%. Crude oil was up 1.83%. Gold was pretty much flat, up 0.13%. The banks, BKX, the banking index, was down 1.35%. The oil index, which has been the weakest sector overall these past couple weeks or so here, is down 2.87%. Dow transports we're down 2.24%, and a nice spike in volatility. Volatility was up 27.35% for the week, guys. That's a lot. And we're gonna take a look at that chart and see what we have, what we can expect in volatility going forward. So let's start off by taking a look at the charts here. I want to start off by taking a look at the ES. You guys know I show the ES, I show the SPY. Sometimes I show either one, but in today's weekly review, I'm going to take a look at the SPY and the ES and see how they're looking going into the end of the month here. All right, so starting off with the monthly chart, the ES. The ES still remains in this nice little upward channel. As you guys can see here on the closing prices dot system that I have at the bottom of my chart, you can see we're basically, since the start of this year, we've been hanging around this 1400 area. So it's going to be pretty interesting. We're going to start pulling away from this 1400 area to the top side, going into the new year. We're going to roll over to the downside, maybe come back down towards this, this area down here. Back down towards around the 1300 level. Are we just going to kind of do the same thing, drift around this 1400 level until, something happens. So the monthly chart's uptrend still intact from the 2009 lows, and we're still hanging above these little major short-term moving averages. If we were to trend lower, the next moving average that we have right here below us on the monthly is going to be the 20-day simple and exponential moving average around 1336. You can see here we closed on Friday at 1386.75. Taking a look at the weekly chart, well, we're back below that key level that we've been highlighting here, 1409, call it 1410. You can see how price action, you could basically use that level as what we like to call the above and below method. Above, you should be bullish. Below, you should be bearish. Above, bullish. Below, well, we're back below it, so look bearish. On the weekly time frame of the ES, we're right here, sitting on top of the 50-day exponential and simple moving average around the 1371 and 1377 area. We start trading below 1380. I would expect to move back down towards 1360, as you can see here on the weekly chart. That looks to be the next support down there at 1360, and you can see this 1410 level. One thing I want to show you guys as well on the closing dot prices. And notice what we have here. All right, for the past 1, 2, 3, 4, 5 weeks, we have been holding above this 1400 level. All right, this week we got a confirmation close below that level. We got a close below that level. Most people that are looking bearish in this market are going to be looking for a confirmation close next week. One thing to take in mind, though, is we still had light volume last week, so a lot of charts, a lot of charts have low volume, so you really can't get much of a good read on them until more volume comes in, which may not happen until, say, the second or third week of January. In any case, here weekly chart, doesn't look good just for the fact that closed below 1400 for the after holding above it for 5 weeks. So we have to watch that key 1400 level. But it's not even 1400. The level is here. It's around 1410. Yeah, that 1410 level. So I'm just using 1400 as a whole reference number since it's the biggest whole number there. 1400. So, anyways, holding below 1410 is not good. Taking a look at the daily chart. Now, I have my channel system on this chart here because I want to show you guys what's taking place here and what we're looking at. All right. If you guys been following my video analysis throughout the year, you guys, have seen me call this market pretty much to the T at some times here when we had this little fake breakouts, these little nice little bull traps. You could go back to the videos and you can see how we were calling some of this analysis. Then I started leaning more toward just showing you guys, the regular ES charts, and some of you guys didn't understand this analysis. But in any case, it has been very helpful. One thing that I want to bring to you guys' attention now, if you guys recall when we had this little breakout back here, which we pretty much called to the T, this area is acting relevant. The same way it was acting relevant right here. All right, the same way they trapped all those, the same way they trapped all those longs. All right here in the market, and they cracked them, and they washed out the shorts. All right, so we're going to be paying close attention to this key trend line. I have it shaded in yellow. You can see we came close to that level last week. We had some dip buyers come in the last couple minutes here before the close and close the market at 1386 off the lows. However, take a look at this going forward early next week. If we can hold this level right here, call it, let's see what level that is. If we can hold 1377, 1375 on the ES, and we see some stocks start to possibly make some reversals in the market, the market tries to get a bounce, it's going to be an action area to maybe start nibbling at some stocks, all right, possibly. However, if we trade below 1375, where we're going to be looking for a move back down towards the bottom of this key range that we've been tracking throughout the year, this key reference channel which is my proprietary channel system, but this area down here would act like an air pocket, and we could see a nice little fall. The same way we saw the fall when we came right back inside the channel right here. All right, the same way we can see the same fall back down here. That's what take us actually down towards that 1360 level that I discussed from the weekly chart there. So it's going to be pretty interesting. Either way, we have different scenarios that we, that we're going to be looking for. If this one doesn't play out, then we're going to do this, and vice versa. You always want to make sure you have your scenarios played out. So in any case, let me take off the channels here, show you guys a plain chart. Drawings. Give me 1 second. Drawings. Hide all drawings. Put the moving averages back on the chart now in some of the studies. All right. Show studies. All right. And now, just be in the plain chart here. All right. So you can just kind of see a little more of the clearer price action here without any of my channel analysis on it. You can see here that closed below 1400 right there after holding above that level since the week of November 23rd. At the same time, we're sitting right on top of the 200-day simple and exponential moving average on the daily chart of the ES. So keep a close eye on this right here. You can see you can see here in November when we try to break back below, when we broke below, we recovered it. Right here, we bounced off of it. Right here, we bounced off of it. Right here, we recovered it. So it's going to be pretty interesting to see how we act around these moving averages going into next week here. As you guys know, they have a big deal, the big fiscal cliff deal stuff going on tonight. As they've been meeting on, I'm pretty sure they've been meeting on it throughout the whole weekend, not just today or Sunday. I remember on Friday going to the close, you could see everybody pulling up to the White House. In any case, that's going to be very important to see. So obviously, any opinion that I give you right now could change, obviously, because depending on what happens with that deal is going to decide which way this market's going to go. But being prepared and knowing levels to watch is going to be very important. So 1360, if we sell to the downside, 1340. We do have some support right here at 1380. All right, so in my opinion, if we break below 1380, we see 1375, 1360. If the market was to really sell off, we could probably even see 1340. I'm not calling for that, but you just want to have those levels in place. To the top side, you want to watch the 1400 level. If you can get back above 1400, we could probably trade back up towards this 1410s, maybe even 1420. So those are levels to watch. Let's go ahead and take a look at the Qs here. Don't want to spend much time on the ES and take up most of the time in the video. But taking a look at the triple Qs monthly chart. All right, this is getting a little bit. This could get a little bit scary right here if we break this little upward channel on the Qs that we've been in since 2009. As you guys can see here, we got rejected from the 50% trend line. I'm sorry, the 50% Fibonacci from this little tech bubble sell-off high to the low. All right, you can see earlier this year we got rejected at that key 70.52 level right here. We have not had a chance to go back up there and recheck those levels. And now we're coming into this key area around this 6150 area, so call it. If we break below 6150 in the next couple weeks, we start holding below that level. Well, that's going to put this. That's going to put this upward trend line that we had in place since the 2009 lows at risk of being broken. Okay, so that's something to watch. Let's take a look at the weekly chart of the Qs. Weekly chart of the Qs. You can see here we have this nice little reversal topping tail that we made last week. All right, sellers came in and respected that topping tail and sold the market. All right, and now if we continue selling, we're going to be looking for a move back on the Qs, back down towards, say, 60, 63, all right, and then 61.33, then this key 60 level. If you guys recall, we called the back test of this key trend line from the break for a nice little scalp play. That worked out pretty well for, let's see here, 1, 2, 3 weeks, and now we're coming back down. Whenever you have a trend line that gets respected and gets bounced off of and you're expecting the move to continue, all right. If it comes back to test that trend line in a short amount of time, that is not bullish for this setup right here, which is a little breakout play, channel trend line back test. If it comes back there pretty fast to recheck the level, that's kind of showing that there's more sellers than buyers. What you would have liked to see with this move is a nice little high base consolidation and then a continuation move higher, which that could still happen. This could be a little shakeout. That could still happen. But the way how everything are set up, it looks like it's going to be a less likely scenario. Taking a look at the triple Qs on the daily time frame. All right, you can see here that key box that I've been mentioning for the past couple of days in the daily videos here, the after the bell market summaries. You can see here that nice little range that we've been trading in. All right, we're below that range there. All right, so therefore, next area we have a support again is at 63 level. And then we have a gap fill here around the 62.25 level or so. So keep those levels in the Qs in mind. If we can get back above, the 64 or back above the 64.25, the bottom of that little range, and start holding above that level there, then that will be pretty good. All right, that will be constructive for the bulls. So let's take a look at the IWM next here. IWM monthly chart. IWM has been showing some relative strength to the other indices the past couple weeks or so here. So if the market was to take off to the top side, you want to make sure you go to the IWM. You can see here the IWM sitting on top of all these moving average here on the monthly time frame, and it's still near these all-time highs up here. Take a look at the weekly chart. Weekly chart that 83 level and the 84 level, has been acting as resistance here. We closed out the week at 82.53. Again, we're still above all these moving averages right here. So, in my opinion, the least path of resistance on the IWM is still to the top side. However, if we start breaking below these moving averages, start breaking back below 82 and break below 81, then 80, and we break below all these moving averages and these little areas of support, we can come back down towards this little bottom range down here around the 77.5 area. I mean, obviously it can't happen in, I don't expect it to happen in 1 week, but if the market was to start getting weak, that could possibly be a scenario that could play out. Again, and then if we could get back over this 84.25, call it 85, and start holding above that level, we can maybe make a move towards the highs, all-time highs. That's if the market was to move to the top side. Again, this week's going to be very key on dictating which way the markets have a chance of going. All right, so take a look at the daily chart now of the IWM here. You can see here we have 1, 2, 3, 4, 5 consecutive lower lows as far as closing prices goes. Okay, and it's not looking good. You can see how this 82 level is pretty much the key level to watch on the IWM. If we, based on this little closing prices that we had during the week of November the 30th through December the 7th, if we start closing below that key 82 level, you can expect the IWM to start getting some selling pressure. You can expect for it to possibly break back below all these moving averages that we have right here. All right, that's how the IWM is looking. Let's go and take a look at the dollar futures now. Dollar futures trying to get a bounce here. I discussed how we have this little yellow shaded area, which is a price action that the dollar futures have been having some nice consolidation going on in that zone throughout the year. If we get above the 80.25 level, you can expect maybe some buys to start coming in the dollar. If we break below 79, expect some sell and hold below that levels. You can expect some sellers to come in. But right now, the dollar is pretty much trading sideways in this little band that we have right here. It's going to be very interesting to see what happens next week here. Actually, starting tonight, Sunday night when the futures open. Weekly chart of the dollar. Just a little quick look at the weekly chart of the dollar. You can see the dollar on the weekly chart trading sideways for 3 weeks now, as far as the closing prices goes. Um, and Got to wait and see what's going to happen with that there. All right, let's take a look at the euro. All right, if you guys recall, we had some great calls out on the euro throughout the year. Not much action going out on the euro right now. But using some of my proprietary channel analysis system here, I've been helping you guys maneuver through the euro. If you trade currencies, if you trade the markets, obviously I have to fix these charts up a little bit here as they do get kind of whacked out when Thinkorswim does an upgrade. I have to make some adjustments. But you can see here, plain and clear. Ever since we called the euro for a breakout back here, when we say, hey, if it gets above this little, red shaded area, expect to move for a breakout. Ever since we called the buy back down here, since we recognize this price action going on in our proprietary channel analysis for this nice little flag breakout that took place. All right, breakout, back test of that breakout, move higher. We've been on top of this, so make sure you subscribe to the videos. If you have any other friends that trade or any friends that follow the markets, make sure you show them our way and tell them to watch our videos. We have been providing some good, accurate analysis throughout the year. In any case, the euro, right now it's really hasn't been doing much. It's still looking bullish to me, in my opinion. May need to pull back a little bit, looking kind of toppy. That's as far as the euro goes, and we use the euro and the dollar futures, of course, to gauge the market, and then of course we work off the key levels and all that other good stuff, as you guys know. All right, so let's take a look at the commodity sector now. I want to start off with taking a look at crude oil via the crude oil futures. Crude oil had a nice little move last week. In my opinion, I think crude oil is going to make a big move in next year. You take a look at the weekly chart of crude oil, the monthly chart of crude oil. You can see it's in this nice little triangle pattern that's shaping up here at the bottom of the triangle pattern. All right. And the apex of the triangle really doesn't start getting close until like around June, next summer or so. But as you guys know, sometimes you get the pattern that breaks out before it gets to the apex. So we got to keep this crude oil futures, crude oil, basically the oil markets on watch here. And this is the same triangle that you see here on the monthly chart. And now I actually have another key trend line, another key momentum trend line that could draw in. That could, if we break above that trend line, rushes back up towards this $100 level per barrel and maybe towards 105, the top of that range. Obviously, again, it's not going to happen all in one day, but something to keep an eye on, a scenario to have in mind so you know how to play it, so you can be reactive, so you can be proactive on the trade and not reactive, where you just, okay, it's there, let me do it now. You already kind of know what to do and how to make a profit on the ID and setup there. So in any case here, crude oil closing its third consecutive week to the green side, to the top side, higher close than the previous week. All right, for 3 weeks in a row now, and we actually closed about this little pivot right here, this little closing price pivot, which was 88.94. We closed the week at 96.2, so we do have a chance of moving higher up towards the, I would say, don't want to get too ahead of myself, but I would say the 92.40 area, 93, 92.50 or so. All right, taking a look at the daily chart. Taking a look at the daily chart on crude oil futures, you can see here we're at the 200-day moving average, exponential and simple moving average around this 150 area. If you can make a move above 92, you can expect to see this 94 level here. 88 is a good level of support on the crude oil futures. Now, I know some of you guys at home watch the USO, so we'll take a quick look at the USO. USO monthly chart. This one looks a little bit more sideways. I think you get a better reading of crude oil using the crude oil futures. That's why I use that. But monthly chart of USO, basically you just chop it around this 32 level. Taking a look at the weekly time frame. The weekly time frame is trying to get up there. We need to break above this 33 level on the USO and hold if you're expecting this USO to start getting some juice here. My target on the USO will be up towards, say, 34.50. Maybe possibly 35 if this thing was to get rocking. Taking a look at the daily chart. The daily chart, you can see here. Let me move this. Let me adjust this trend line right here. Daily chart, you can see we're at this little key resistance level, of course, from this little pivot high that we made right here. If we can start holding above 33.09, for a couple of days here and get some nice little bullish action going on in crude oil, you possibly expect crude oil maybe to come up here and try to test this 20-day moving average around 34.13. All right, so let's take a look at gold. Gold futures /GC. All right, gold futures, they got that initial bounce off that key trend line on the daily chart here. Actually, let's go to the monthly first. Sorry about that. Monthly chart of gold sideways in this little range between 1556 and 1826 or so since since last year. And right now, if we close the month out like this is going to be gold's third consecutive lower close. All right, if we close a month down, which I'm kind of expecting, so you can go ahead and mark that in the book. Taking a look at the weekly chart, though, we have some interesting analysis here. On the weekly chart, gold is sitting right on top of this consolidation that we made earlier in the year before we had the breakout. All right. Now, in my opinion, I think, my opinion last week, some dip buyers came in right here. All right. And this is a consolidation right here. Hold on one second. That's a consolidation that I'm talking about. And in my opinion, I think this would at least should be able to get some type of bounce off the 1640 area. May have one more week of chop of, trying to do some little shake and bake action down here. But I do think that gold should try to get a bounce, possibly bounce back up towards these 1680s or so, maybe even 1700. Just for the fact we had this nice little base of consolidation that went on for 1 month, 2 month, 3 month, 4 months, and now we're finally back testing. I don't think we just crack right through it unless something, unless something in the gold market, seriously changes. All right, take a look at the daily chart here. The daily chart, gold got that little bounce off the key trend line that we had, from all this little action before we had this nice little momentum move here from the breakout. Kind of little ascending triangle right there. You can see gold respected that trend line last week, and now this week's trading sideways. Again, I'm going to be pretty interested to see how gold reacts to this fiscal cliff fiasco that we have going on. Let's see what else we want to cover here. Silver, I know some of you guys trade silver. I'll cover silver real quick. Silver is holding up pretty nice at this 29 level, trading sideways. If we can catch a bid and get over this 29.55, silver could get a nice little move to the top side, back up, possibly back up above 30. If we break down below 29 and hold, expect some of these little gaps down here to get filled. Next gap support that we have is around here, around the $28 level, which is $1.10 lower. Weekly chart of silver doesn't look constructive, but hey, it formed a little doji, so it means indecision. So people really don't know what to do right now in silver. Monthly chart, pretty much sideways between this 25. Pretty much sideways between this 25, 26 level here and this 34 level. All right, and that's that. Gold miners, GDX. Going to be pretty interesting to watch the GDX. I have my channel analysis on it. My channel analysis, we did call the breakout back here when we broke down. Sorry, we did call the breakdown out this respected range that we have that we analyze here. That worked out pretty well. You can see we've been trying to break back above that level on the GDX. It has not been able to happen. And now, if we start to see the GDX, the gold miners, basically start holding some lower lows, some lower highs, and start drifting, and starts to drift away from this little shaded area, from this little channel, this little prior channel that we had. In other words, they don't attempt to get back inside of it. Well, then we're going to be looking to possibly reshort the miners. So the miners are in a pretty interesting area right now. Some of the miners got a bounce last week like we were expecting. I mean, if you take a look at Newmont Mining was an easy setup here. Basically, gold was oversold. Gold was due for a bounce. NEM was coming to a triple bottom area. That was a no-brainer play, and we actually called that out in our room on Wednesday. Actually, not Wednesday. Sorry, that was on Thursday. Once we got this little confirmation that people were trying to buy in here. All right, so let's take a look at the VIX. Last but not least, the VIX. VIX. Nice little downward channel breakout play that's set up here. And if you guys watch my other video that I put out on my other YouTube channel where I talk about stocks and all financial stuff, Ask Chris He Trades. I did the first new series that we have called Strategy Session. You could go check that out. I put it on my website, channelguidetrader.com. But this is the same setup you have. You have a nice little downward channel break play, breaks out, comes back tests a trend line area, and then takes off. That's a perfect example of the play setup, and I should have included this in my video. But in any case, VXX is really starting to get some momentum here on the volatility index. You can see how the curve is just, pretty nice little takeoff there. And if this continues to stay above the $19, $20 level, we're going to be expecting volatility to really pick up and start expecting wider range price movements across the board in the indices and stocks. So that's how that's looking. Hope you guys enjoy these videos. Make sure you join us in our chat room, mywallstreettv.com. Password to log in is smart. If you're interested in trading with our firm, contact me at ccooper@wallstreettrading.com. We have the best rates on the street, uh, lowest commission rates, buying power, leverage, all that good stuff for you guys that are in need of that. We have it. We have a good team to help it put everything together and then work with you all, develop your trading skills. In any case, have a great day. Enjoy the Sunday night football and Happy New Year's. Cheers.